The broadcast is now starting. All attendees are in listen-only
Welcome to the
mode.
webinar. Ron here at AbleSys. Be glad to help. We'll take a look at the charts. Let's see what the AbleTrend signal said today and recently, because we're going to look at a daily, weekly chart too, which is the first chart. I always like to start with the stock chart. So this is a longer-term chart. This is the Qs. Good chart to take a look at. One that I look at every day, just to see where the overall trend of the market's going. And clearly there was a very, very good 4 months ago, just a great signal back here at 300, and technically still in it, although it could have been a stop out here. If you use the stop, I like to put the stops below the weekly support, only because we're in such a big uptrend. But technically speaking, if it goes down below actually the third lower row of blue dots would really be the best place to put it in this big uptrend. So you got 1, 2, 3. So we'd be stopped out there, right back in again here on the sweet spot. A couple of weeks ago at 324, we're at 333 today. So big, couple real big winners here for long-term trading. And these are places where you want to get in if you weren't in. These are perfect sweet spots. And I bring that up because we got a brand new one today. Who knows what's going to happen? Nobody knows, but the software likes it. Likes this sweet spot here today. Here's another one back here, and there's of course the beginning of the trend. If you missed that, you had 3 huge winning sweet spot trades. If you trade options, shares, that's up to you. But the software gave us 3 really nice winning signals right there. So that's some good money right there on this chart. And another sweet spot here today. Now, the sweet spots are not going to work forever. Usually on the longer term charts, the first couple, first like here 3, that's fine. But the trend just can't keep going up forever. It's not possible. So, as it goes along, generally speaking, the sweet spots are going to be a little weaker. For the intraday trading, the first sweet spot is the best one, and that's the only one that I would suggest. But on the longer term, because this is more for like retirement accounts, that type of thing, long-term trading, first couple of sweet spots, even this one here, 3 great sweet spots. Now I got another one today. Hey, good. Software likes it. Blue bar, blue dot, blue 1 minute, blue daily, blue weekly. Everything is blue. Blue price bar. So software says we got another sweet spot here today. So either way, up. Doing really well and very helpful. Taking a look at this long-term daily, weekly chart. Let's look at the intraday. Everybody loves the intraday. Michael Z. All right, Michael says, hey, Ron, great day. Yes, sir. Let's take a look at the mini NASDAQ or mini Russell is another good one to trade if you feel this is a little too fast. Everybody's different. And it's very quick. Mini Russell, I think, is another very good one to trade. It trends, nicely, and it's not quite as crazy as or volatile as NQ. Now, the big move came over when earlier this morning. There was some news, and you can see the big down move. There's usually 1, sometimes 2, even rarely 3, but they could even be 3. Last couple of months, there was actually 3 big trends a day. Usually there's 1, almost for sure, and then sometimes even 2. The point is you got to catch those big trades. If you don't catch those, the rest of the day is kind of up and down. A couple winners, couple losers. The rest of the day in general is break even. So you got to catch the big winners, otherwise you just get you get ground out. And it's a grind. I mean, day trading is a grind. It's not easy. It's not for everybody. And they'll definitely be losing trades and losing days. I can assure you of that. So I tell it like it is, both ways. I don't exaggerate or cover up losing trades either, because that's not fair. That's not real. And I'm really serious about what I do here. So the big move, the point is the big move came, and this was a big move, came over this early in the morning. When I see a big move like that, I go, okay, we'll see what kind of day it is. Sometimes it's good, sometimes it's not. Nobody has any control over that. Nobody. First 5-10 minutes, obviously no trade zone in here, red and blue on the chart. You got, 3 minute saying a sell signal. It's red, arrow pointing down. You got blue dots, which means uptrend, and then you got the 2 minutes up. So it's just a mixed bag of everything. It's just a big mix. Nothing to do right there, obviously. Now, first trade technically is right there. Being that these dots are like 30 points away from being that the price is like 30 point, there's a 30-point gap in the middle there. That's crazy. I mean, I'm not going to touch that with a 30-point gap. I mean, 15 is like maximum that I would be comfortable trading. However, I mean, if you wanted to, you could have, technically it's not a trade, but technically you could have got in right there. There's a blue bar. It's closer to the blue dots. So, got to be fair about that. And that's a losing trade because then we're out right there, at the, once a red bar comes in, obviously, we're immediately out of the trade right there. So started off on on the losing side there of about 15 points. Another reason why you're just simply not going to take this. This is 60 points away from the dots. I mean, that's a joke. Nobody in the world is going to touch that. Remember, the higher the price is, like look over here, the top of these blue bars, the farther the price is from the blue dot, well, the greater the chance it's going to snap right back to it. See, the prices want to be near the dots, red and blue dots. So, that's why we don't ever buy way up here, because just wait a few minutes and wait for it to pull back to the dots. Same way we would never touch the prices down here. It's 50, 60 points away from the red dots. I mean, that's just ridiculous. That's like a rubber band just waiting to snap back. Okay. Almost had a sweet spot. Boy, I wish this would have touched this here, because this red bar would have been a classic perfect sweet spot. Sometimes you got to use, trading is 90% mechanical, and there's 10% where you just got to use a little bit of judgment there. That's technically not a trade. Some people mentioned that they did get into that one, so great that you did, because it's triple confirmation and you're much closer to the red dots when you're here than way down here, which you wouldn't even consider taking. However, anybody who did, there's your 2 green bars. Put your stop just to point the 2 above it, and you're ticked out right over there. So now, anybody who did take that trade, and technically that was not a trade, so, got to be fair about it. I'm not here to, fool anybody, or certainly not to mislead anybody, but if you did, it was a good, that would have been a 20-point winner. One big, gigantic no trade zone there kept us out of this choppy, ugly mess. Again, we're not touching anything, up here when you're 30 points or 25 points away from, the blue dots. However, perfect sweet spot right there. We lost 5 points on that trade, but that was a perfect sweet spot right there to take. Why? It's touching the blue dot. You just can't get any lower risk than that. That's a perfect sweet spot right there. Just as this one was right here, and we lost 5 points on that one, actually 6 or 7 points, because the stop loss goes on the previous higher small red dot. So, started off there, it was a little rocky start there. It wasn't fun. Triple confirmation buy signal there. That's about a break even. No trade zone here. We've got a triple confirmation trade here. This is really close to getting ticked out. So I'm going to count that as a loss, because I like to make things sound actually even worse. Right there, that's a perfect sweet spot right there. Why? The prices hit the blue dots, bounce off of it, the next blue bar, there's your sweet spot. So we're going to go long at 560, and that one worked out real nice, because as you could see, we made up for the earlier losing trades. And then that one just took off very nicely. We're going to be stopped out right here. It's really close to a stop out, because your stop goes a point below. That's really close. Let's assume we did get stopped out. Again, I always assume the worst. And then, of course, we've got another perfect sweet spot to get right back in again there. And that one worked out nice, because there's our 2 greens. We're going to be stopped out right there, because there's the 2 multiple green bars right there. We put a stop a couple points below that, and we're stopped out there. So we picked up about 10 points on that trade there. And then on the sweet spot right over here, that was a real good one right there. That was the one real nice trend. That was a good winner right there. That was about 40 points. Yep, that was 40. So that's 800. That's even call it 750. I was like to, again, downplay the winners and actually exaggerate the losers. So we picked up 750, we'll call it there, another 100 here. It's 850. Certainly helps to make up for the earlier losses. Probably get back about double what we lost earlier. Triple confirmation buy signal there. We lost because we're out on the red bar there. Triple confirmation. Really good one right here. This one was good. Let's assume, and I didn't get into, we're not going to get into nickels and dimes here. Let's assume we were minus 400 going into that $800 winning trade. So now we're plus 400. We lost 10 points here. That's a 10-point loss right there. So about, again, you're not going to get these perfect. Nobody is. I'm not. Nobody in the world is going to nail these exactly perfect. That's why I exaggerate the losses, because I like to add on extra money for commissions and extra money for slippage, and maybe you missed a trade here or there, that type of thing. But you can't miss the big ones, because if you miss that, you're sunk. The rest of the day, only because of the market movement, just doesn't move much. So, got to be up about 200-300 there. We got a nice, and it could be more than that, but again, I'm low, being very conservative on that. This is just an absolutely, gorgeous trade right here. Triple confirmation, 1 minute, 2 minute, 3 minute buy signal. There's the two greens, and we get hit right there, ticked out right there, stopped out there at 55. We got long at 22. Let's even call it 25. That's about a 35-point winner. I'll call it 30. So that's another 600. Well, that worked out really nice. So 600, and we were up a couple hundred going into that one. Losing trade right here. We're going to give back about 10 points on that right there. So we give back about 200 on that. So maybe, and that's the end of the day. That's the end of the day. So we easily made a few hundred on the day. Very conservatively speaking, and that's how we trade with the software. You just have to trade strictly on the signals and not on your emotions. Strictly on your signals and not on your emotions. And that's the hardest part. Otherwise, trading would be easy, and it's not easy. I tell it like it is. There's risk in trading. There's losing trades. There's losing days. It'll drive you nuts sometimes. So, gotta be careful, and just you got to use the signals, because these algorithms have got a 20-year track record. They're not going to stop working today, I promise. Even if it was a losing day, I promise it's not going to stop working after all these years. You just have to be very, very disciplined to be a successful day trader, no matter what system you use. It's the only way you can be consistent. That's the nice part about AbleTrend. Larry's asking, where would you put the initial stop at 1432? All right, let me go back to that real quick, and then I'm going to go over the scalp chart. 1432 right here. Oh, yeah, good question. Initial stop's just going to go a point or two under the blue dot. 1 point under it is fine. There's no lower row of blue dots. 1 point under is fine. And that was a losing trade right there. We lost about 10 points, so that's 200. That was a minus 200 on that one. And then we came back and made 600 on this one. But that's how day trading is. It's not for everybody. And it's okay if it's not for you either. Either you do the scalp chart, which I'll show you next, which is much lower risk, or you trade, longer term stocks. It's what I like to do. Okay, here's the scalp chart. And this is a simple chart, really simple chart to trade. If it hits the blue dot and closes above it, you don't need triple confirmation. Doesn't matter if there's red arrows above, because we're only going to be in and out in a minute, and we're only looking for 5 points. And these arrows are up here 30 points away. So they have no effect on the trade. First trade of the day, a winner. Right there is where we're going to go long. Bounces off the blue dot, shoots up. 5 points, winner. Very next trade is right here. Hits the red dot, closes under it. A minute later, another $100, winner. So that was, nice little start right there. Picked up the first two trades, 2 winners. Next trade would be no trade would be right. This is too tight in here. There's only 10 points. Yeah, there was a couple of winners. I'm not going to count them. Why? Because there's no room for the price to bounce off the red arrows down or to bounce off the blue dots up. You got support and resistance just hanging right there. That's a losing trade because that's a valid trade right there, as well as this one. And once it goes 2 points under the blue dots, we would lose about 3 points on that trade. Okay, that's a winning trade. It hits the arrow, goes up 5 points. That's a winner. And if it's in between the arrow, that's fine too. This is really close, but you can't count it because it doesn't touch it. Okay, no trades along the way here. If it's 8 points away from the blue or red dots, meaning if it's 8 points under the blue red dot or 8 points above the blue dot, no trade. Why? Because our stop loss is 2 points on the other side. So that'd be a 10-point loss. We will not risk more than 10 points on any trade. Winning trade there, winning trade there, losing trade there, winning trade there. Let's see what happens right here. That's a losing trade because it went 2 points above the dot right there. Winner right here, it's another 100. And then kind of rolling right along here, you can see, a couple winners, a couple losers. Market was a little choppy. That's a winner. That's a winner. That's a winner. That's a loser. That's close. I'm going to call it a loser. Clearly a winner right there. And then a loser there. And then another winner right there. You get the picture. Now it's like 4 o'clock New York close. So good stuff. Definitely been profitable on a daily basis, but there's losing days too. But obviously way more winning days for the scalp chart. You just got to be really patient and really disciplined, and that's the hardest part with day trading. It's just not for everybody. But that's okay. AbleTrend works for every market in the world. Clients all around the world use it for something different: long-term, short-term, swing trading, stocks, futures, whatever you like. We don't tell you what to trade. It's up to you. I just show you how to utilize the software to your benefit and interpret what the charts are telling us. So hope this was helpful. I think you'll like what you'll see here. I'm always glad to help. I'm certainly glad to do a one-on-one trading session because you're just wasting your trial money, and anybody only gets one trial per client. So, I don't want anybody wasting money because I wouldn't want to waste mine. So I offer that to everybody, a 15-minute one-on-one trading session for anybody who has a trial right now. I can show you more in 15 minutes than you can do on your own the whole month. So I just want you to get your money's worth out of it. So Michael says, thanks for another great class. Love to take it. You're welcome, Michael. Thanks for being here, everyone. Most important, like a vitamin. Good one, Michael. Most important, everyone, just stay safe.